Good morning, everyone. Thanks for joining us. We're doing a regional broadcast today with our economic development partners from around the region. First, I want to give everyone the opportunity to introduce themselves. My name is Stephen. I'm with the Flint and Genesee Chamber of Commerce. Dan, I want to hand it to you next.
Hi, I'm Dan Casey. I'm the head of the Economic Development Alliance in St. Clair County, and I want to welcome you all to today's webinar.
Quentin.
Hi, good morning, everyone. I'm Quentin Bishop, Executive Director, Lapeer Development Corporation. Happy to be here today.
Tyler.
Yeah, Tyler Rossmessler. I lead the economic development efforts at the Flint and Genesee Chamber.
Justin.
Justin Horvath, President and CEO, Shiawassee Economic Development Partnership, Shiawassee County.
Justin, I love the cardboard cutout that I saw of you yesterday on Facebook.
Classic.
Yes, that was Flat Justin. For our Shiawassee stakeholders, they know I was Mr. Owasso last year. That was part of my campaign. And unfortunately, the campaign this year has been canceled. So I'm going to be Mr. Owasso 2 years in a row.
Oh, my God.
Yes.
Is that a surprise?
Hey, Justin, I wanted to let you know that I have your T-shirt on the chair right behind me.
Okay. Feel free to put it on, Dan.
Your face on the front from being Mr. Owasso? Yeah.
Yes, I do. Yep, that's me.
Good. I'm glad we got the housekeeping out of the way. Next, Brooks, would you introduce yourself? And I'm going to bring up your PowerPoint presentation.
Well, hello, everyone. I'm Brooks Kindle. I'm a business growth consultant with the Michigan Small Business Development Center. And is the PowerPoint up?
Yep, you're good to go.
Okay. Well, welcome to everybody who's tuned in today. We're going to talk about the latest guidance from the Small Business Administration and Treasury Department about loan forgiveness under the Payroll Protection Program. And so I want to talk specifically about planning the spend down of your PPP loan to maximize your forgiveness. In planning for forgiveness, you need to pay attention to 5 different elements that, when combined together, they will determine the amount of your loan forgiveness. You need to correctly observe key program dates. It's important what you spend your loan proceeds on. The ratio of payroll to non-payroll costs is important. Any reductions in employees' salary or hourly rate will result in the possibility of a reduced forgiveness, and any reductions in staffing levels will result in the same thing. Before we go into the details of those 5 things, though, I'd like to talk about a few definitions. Critical dates. You have an option for the base period or reference period of 2 choices. It can be February 15th to June 30th of last year, or January 1 to February 29 of this year. What they're talking about, the reason that's relevant is the reference period determines the average weekly compensation and average weekly full-time equivalent employee headcount. The disbursement date is the date your funds are received. It's not the date you sign a loan document or the date that it was approved. It's the date the money is actually in your account. The covered period is the 56-day period immediately following the disbursement date. And you can elect to use an alternative payroll covered period, which starts the first day of the first pay period following the disbursement of the loan. So, for example, if you received your loan funds on a Monday and a new payroll period started the following Sunday, you could use that date to turn the clock on. And the full-time equivalent employee restoration date is June 30. And I'll explain that a little more in detail later, but that's another key date. So the first thing we need to do is talk about what payroll costs are. And payroll costs consist of the employee gross pay, including salary, wages, commissions, tips, and it's capped at $15,385, which is 8 weeks worth of $100,000 compensation. All the employer, state, and local taxes paid on employee gross pay, such as state unemployment insurance, can be included. Employer health care benefits, including the health care insurance premiums. Employer paid retirement benefits, including defined benefit or defined contribution retirement plans and employer 401k contributions. Along with that, the full-time equivalent employees number is calculated by dividing the average number of hours paid per week divided by 40. So we'll talk a little more about that in a minute. The permitted uses for the Payroll Protection Program loans are payroll costs, obviously, as I described in the previous slide. And a couple of new wrinkles here. Payments of interest, and this is the exact language from the guidance, not including repayment or payment of principal, business mortgage obligations on real personal property that were incurred before February 15th of this year. The interpretation of that would be is that interest on loans for real property, equipment, vehicles could be included in the interest portion of this. The next is business rent or lease payments pursuant to lease agreements on real or personal property enforced before February 15th of this year. The interpretation of that is if you're leasing a car, leasing a computer server, leasing a copy machine, that could be included as well. And finally, business payments for a service for the distribution of, and this is another direct quote, electricity, gas, water, transportation, telephone, or internet for which service began before February 15th of this year. So aside from the common, gas, electric, water, your telephone and internet, telephone could be cellular phone. Transportation, we believe to mean automobile expenses, gas, things like that for a company vehicle or used for business vehicle. So for the ratio of payroll to non-payroll spending, the repayment of part of the loan may be required if an employee's average annual, at least 75% of the forgiveness amount needs to be used for eligible payroll costs, and no more than 25% used for other loan uses. So in other words, the non-payroll costs as a percentage of the loan need to remain under 25%. It's also important that you maintain pay levels where possible, avoiding reducing any employee's average annual salary for salaried employees or average hourly wages for hourly employees by 25% or more during the covered period or alternative payroll covered period compared to the period January 1 through March 31st. So in other words, if you have a reduction in what's being paid in terms of either the salary level or the hourly wage rate, if you reduce it more than 25%, that will result in a diminished loan forgiveness. If you're comparing wage levels to determine if your loan forgiveness amount will be reduced, employees who earned wages or a salary at an annualized rate of more than $100,000 in any period of 2019 aren't considered. Also, if applicable, you want to reverse any reduction to an employee's pay by June 30th. If a given employee's wage levels, salaried or hourly, between February 15th and April 26th are lower than as of February 15th, and you restore the wage levels by June 30th of this year to the same or higher than they were on February 15th, there will be no reduction in forgiveness. However, if the pay reduction was made outside February 15th to April 26th timeline, in other words, you reduce their pay prior to February 15th or after April 26th, then the forgivable amount may still be reduced even if the pay reduction is reversed by June 30th. So that's why these dates are very critical. Maintaining staffing levels. You need to ensure that the average number of full-time equivalent employees during the covered period or alternative payroll covered period is at least equal to the average number of full-time equivalent employees during the period from February 15th through June 30th of last year, or January 1st through February 29th of this year. If the number of FTEs is lower during the covered period or alternative payroll covered period than these two time periods, the amount of the loan forgiveness may be reduced proportionally, similar to the wage rule. Also similar to the wage rule, if you reverse any reduction in staffing levels, in other words, the average full-time equivalent by June 30th of this year, you won't have your loan forgiveness reduced. So for both the compensation side of it and the full-time equivalency side of it, the important thing is, first of all, to be consistent in what you're using as the reference period. And second of all, if you reverse any decreased compensation or decreased FTEE by June 30th, that should put you in good shape. And the important thing about that is while even though you have an 8-week window beyond when you get the funds, so say for example you got your PPP funds this previous Monday, and your 8 weeks now would extend sometime into July, that June 30 date is constant. So that's something to keep in mind. In terms of applying for forgiveness, you need to work through the lender that is servicing your loan. And I would suggest you ask your lender what documentation is required. The SBA guidance that was released last weekend includes listed documentation, and lenders have 60 days to make a decision on loan forgiveness. The SBA loan forgiveness application can be found on the Department of Treasury website. But I would also suggest don't be surprised if your lender has their own application form or asks for information that is different than what the Treasury Department website has. So it's important you communicate with your lender, and if you're going to contact them anytime soon, you're probably going to get an answer along the lines of, we don't know yet, we're still trying to figure it out. And so that is all I have to say today. And this is my contact information. If anybody would like to contact me or get a hold of the Michigan Small Business Development Center, we provide one-on-one confidential consulting services at no cost to our clients, because we're funded by the SBA, MEDC, and the host institutions around the state where our 11 regional offices are housed. So I will take this down and we can talk about some questions now.
Thank you, Brooks. I'm going to bring up the rest of our colleagues. There we go. First, we'll start with any questions from our regional partners.
Yeah, if I could, Brooks, great job. Thank you for that overview.
Thank you.
I've gotten several questions here from some of our companies in Shiawassee. I actually have 4, so we don't have to go through them all right away, but I will read them to you. The first one, are payments to an individual done through 1099s, not W-2, for a sales commission eligible for forgiveness? So that's 1. 2, what happens when you reduce, or what happens to the reduction in loan forgiveness if an employee left between February and April this year and was not replaced? And then 3, how is the reduction in forgiveness handled if an employee leaves, for example, a planned retirement during the forgiveness period? Do they have to be replaced?
Wow. Okay.
Yeah.
Well, on the first one, 1099 employees can file for their own paycheck protection plan or unemployment. So I would interpret the answer to your question as that compensation cannot be included in the payroll costs.
Okay.
The second one is an employee left and didn't come back?
Yeah, so this would be before they got the loan. So this is looking back at the employment levels between, I guess in the previous few months before this happened. And then the last question was, and then what happens if an employee leaves during this time period that they're in, the 8-week period?
Well, if an employee leaves in the 8-week period and it's before June 30th, that's going to impact their full-time equivalent employee count. If they leave before that period and don't come back, it would depend on the specific date. That's why saying the dates are really critical. And I know it's a lot to remember, but it's very clear when you look at what the Treasury released last weekend, what those dates should be.
Okay.
Justin, was that all of your questions?
Yeah, I actually have one more too. I've got people texting me during this asking these questions. One company has an affiliated entity that owns their building and holds the mortgage, and they do self-rent between them, but there's no formal written agreement. So if they're looking at excusing the mortgage interest, it's in a different company name, though affiliated. So how does that get treated?
Well, of course, the obvious thing is you should have financial things like this in writing for purposes like this. But another thing that I've found myself saying almost on a daily basis is just because we have a pandemic doesn't mean you should suspend common sense. So if the company that's paying rent to the affiliate can show via their records, we pay $5,000 a month or whatever it is, and we have for a period of time, I would say then that's what they should put into their application. And I would also suggest that keep in mind, all the banks are struggling to deal with all of this. And when we get around to doing the loan forgiveness applications, I can't fathom a bank is going to have the time or the inclination of their personnel to sit down one-on-one with each customer and go through a bunch of records and interrogatories and other things. So what I've always been telling people for the last few months is A, keep impeccable records, and B, make your decisions based on the spirit and the intent of the program. So that's kind of a long-winded answer to your question, but given a history of making rent payments to an entity, that should suffice.
Okay, very good. That's all I have right now.
For now. Got it. Quentin, Tyler, Dan?
Quentin, did you have something? You're muted. You're muted. You're muted.
Quentin, how do I unmute you?
There we
There
go. In the show, unmuted. That's cool. So I want to say thank you, Kevin Ritt from Senator Peters' office. He had sent over a document. We were talking about it yesterday, and what's unique about our situation is that our office, being a 501c3, applied and was approved for a PPP loan, and so we're in the heart of this documentation, and we're in this application period, and we're going and learning these guidelines kind of in the field firsthand. And so Kevin sent these best practices, and Brooks, you hit it on the head. And one thing that he mentioned though was, considering establishing a separate bank account to house your monies in, so it's completely separate from your general funds, from any maybe other savings account versus a checking account, but a dedicated bank account that would be very easy to track. Money's in, the loan lands in it, right? And then you can see the deductions, and it'd be easier for calculation in that way. Another thing that he had said was, prepare an 8-week forecast to determine how they're going to be spent. So get ahead of it, set up your Excel spreadsheet or whatever workbook that you'd like to use, and plan out 8 weeks, because we have trend data, right? Like on wages, and we can cost what utilities are going to be. And if you have a mortgage payment or rent payment, plug in your numbers on an 8-week period, right? And then as you're either paying bi-weekly or bi-weekly or monthly, go back and cross-reference your records, because the name of the game on the forgiveness piece is documentation, documentation, documentation. And you want to calculate the FTE during the applicable time, but you also want to be able to calculate all those other expenses that are the non-wage related, right? The utilities, especially transportation, if you're a carrier of sorts. And once you can estimate those numbers over an 8-week period of time, it's going to make the bank and your relationship a lot easier, because they're going to have a set of numbers, you'll have your set of numbers, and it's just a little bit of cross-referencing that I think in the long run, the more documentation that you have, the better off we'll be if you have to prove, or if you have to support yourself in any loan forgiveness decision. So just wanted to add that bit of information there.
Yeah, and a couple of comments along that line. I know some banks actually set up a separate checking account to disperse the funds into. It wasn't an optional thing, they just did it. And an easy way to do this is whether through literally a second checking account or a second general ledger account, you show cash in and cash out, because then it makes your record keeping easy. There's a plethora of spreadsheets out there to help calculate the amount of loan that you could have applied for, and have 8-week schedules that you can use to put in things. I know the SBDC has one that you can get from our website. And so, while either before or as early in the process as possible, you can start doing some forecasting, the more time you're going to have to make decisions to generate the desired outcome.
Brooks, could you walk somebody through, like they applied for the loan, they've been operating for a few weeks here, maybe they've been keeping good records. What's it going to look like when it comes to forgiveness? Walk them through how there's going to be an application for forgiveness, and can you just kind of walk us through that line?
Sure. Well, as I mentioned earlier, the lending institution has 60 days to process an application. In terms of what the application is, they may use exactly what was in the federal guidance, or they may come up with their own. I have been working this week on developing a Excel workbook that mirrors the guidance that was released last weekend. So in other words, the spreadsheet looks just like what's in the guidance and has the logic in it to help make the appropriate calculations and so forth. A couple of my colleagues are beating that up at the moment to make sure we got everything right. And I'm hoping we can release that the beginning of next week for use. But in terms of applying, you're going to hopefully your lending institution will be sending out something that says, okay, we're getting close to the end of the 8 weeks here. Here's the application form you need to use and what the process is. I have a feeling it's going to be very different for each of the banks.
Mm-hmm. But that process will be initiated by the bank. And when does it become converted? So say 75, someone got a $100,000 loan, $75,000 they use to pay payroll, and that's all going to be easily forgiven. They go through the application. What's that conversion going to be for the remaining 25, maybe that they didn't get forgiven for a loan period?
Yeah, the loan will have a 2-year term, and amortization starts 6 months after the date of disbursement.
So if you got a disbursement on March, no, it would be like April 15th. Then you're looking at like October 15th is when you're
when you start paying it back, and it has to be paid off within the 2-year period. Interest rate is 1%.
You'll learn your payment You'll learn your payment amount based on some feedback you'll get from the bank after you get it, after you go through the forgiveness process.
Correct.
Dan, any questions?
Yeah, the only question I have right now, which is was texted to me by somebody, is how do you deal in calculations for the forgivable portion and wages? How do you deal with people who get a commission, salespeople?
Commissions are explicitly mentioned as part of gross payroll costs. So I'm assuming that the commission is W-2 income as well. So that's part of your payroll costs.
Okay.
And we do have some questions from viewing. The first question was regarding your slides, Brooks. Can those be made available?
Sure, I'll send you a copy and you can distribute.
Okay, thank you. Next question, and we may have touched on this, but self-employed businesses, so I assume 1099 employees, will you just recap your response again?
Yeah, if you're a 1099 independent contractor, in essence, you're your own business. So you can apply for a PPP loan, and you can apply for unemployment too.
And then will you, the question here, I'm going to put it up. Please elaborate on the June 30th date as constant. What does this mean? You can see the rest there on your screen.
Well, Patrice is correct. If she's about to get the loan, her 56-day window is going to go past June 30th. But the date by which you have to have reversed any compensation reduction or full-time equivalent employee reduction is June 30th.
Okay. Next question. Please explain part-time compared to full-time employees.
In the guidance that was released last weekend, they said a couple of things. First of all, they're considering full-time 40 hours a week. So if you're a salaried employee, salaried full-time employee, 40 hours a week is what the assumption is. Now, if you had 2 employees who work part-time, say each 20 hours a week, that would be considered 1 full-time equivalent employee. However, if you had an employee that worked, say, 32 hours a week, that's still part-time. I'm assuming the way I read the guidance, you could consider that a 80% of a full-time employee, but they suggest a simplified method of using 0.5. So any full-time employees are 1, any part-time employees are 0.5.
Okay. This next question is kind of along the same lines. For businesses that are down or working reduced hours, can you pay employees for hours they are not needed due to reduced business, or give a raise in hourly pay to get the full-time employee equivalent?
Theoretically, yes, because I have seen no language that says you can't give people hazard pay or any other form of compensation. And even in theory, if you're paying them to sit at home, you're doing what the intent of the act was, and that's to get money into people's hands and get them off the unemployment rolls. I would make sure that you're clear on what you're doing and why. It depends on the kind of business too, but as I said in one of the earliest webinars I did almost 3 months ago now, it's a great time to do all those things that you never seem to have time to do. Mm-hmm. Whether it's write policies and procedures or work on a website or, deploy Slack in your organization, whatever things that can be done remotely that you never seem to have time to do when you're open and hit it hard, not only accomplishes something constructive, but people are doing something constructive, not just earning money sitting at home doing nothing.
Right. Next question. I think it's a continuation from earlier. Is there a different process for self-employed businesses? Do you do 8 weeks of your profit forgiven?
No, it's based on income, not profit. So if you're self-employed, it would be what you are drawing out of business, whether you issue yourself a check or whatever, but it has nothing to do with profit.
2 more questions here. First one, what about companies who cannot have all shifts returning yet? And then another question from the same person, can workers' comp insurance premiums be included for forgiveness?
I've seen the answer to workers' comp insurance premiums both ways, yes and no. It's not, workers' comp insurance is not specifically mentioned in the Paycheck Protection Program application. In terms of the other question was about multiple shifts.
Mm-hmm. Yep.
That is what it is. It's all about dollars out in payroll and full-time equivalent headcount.
Mm-hmm. Another question came in. What if you have an employee that quits during your 8-week period?
I would interpret that to be similar to if you call an employee back to work and they refuse to come back for whatever reason, you're not dinged on that. So the way I would approach that, if an employee left, I would reduce both the reference period and the covered period by whatever that equivalency is. You shouldn't be penalized because an employee left of their own volition.
Mm-hmm. Another question about the slides. So Brooks is going to share those with us, and then we'll get them out to all of you. Let's see. Did your webinar state whether we use an accrual base or cash base in computing payroll and utility costs?
There's some language in the application about when it was paid or incurred. And I don't remember it off the top of my head, but if you download the thing from the Treasury website, it walks through that. So like if, say your electric bill came in a week after the end of your covered period, well, that expense was incurred during the covered period, so you could claw that back. It does not allow you to prepay things, though.
Okay. Another question. What if an employee retired on April 1st before the loan date?
Same. I would answer the same way as I did to the employee who quit.
Okay. Those are all the questions that we have right now. There will be a couple more that trickle in here before we close out. But Brooks or anyone here on the panel, is there anything you'd like to add before we start to close out?
Yeah, I just got another question emailed to me, and I'll just read what it says. Don't you have to deduct your federal taxes from your gross payroll for forgiveness?
No, it's gross payroll before federal taxes. It's very clear on that.
Okay. Anyone else?
I think you got a couple more
I have one
questions
actually.
coming
Can
in.
you?
Yeah.
Oh, yep. I see a few coming in. Can you talk a little bit more about the safe harbor rule and how that might help employers? If yeah, go ahead. Safe harbor.
Is this in reference to the employee retention tax credit?
No, if well, my understanding is if you make an offer in good faith to bring an employee back and they choose not to want to come back, then you're not going to be penalized against your FTE count.
That's correct. I mean, the language is specific on that. That's similar to an employee quitting or retiring. I mean, you shouldn't be penalized because an employee has made a decision when you've offered them employment.
Yeah, well, I think that's critical because the number one thing I've heard from companies is a lot of folks are enjoying being on unemployment. You know, they like the check, so I want to bring them back, and they may not want to come back. So that's going to ding me on my PPP forgiveness. So I think that's a huge component of this for companies.
Well, it's also technically going to ding the employees on their unemployment insurance, because if you make an offer to bring them back and they decline, that disqualifies them.
A few more questions. If you do not use all of the 75% of the payroll costs, do you have to pay back entire loan or only the portion not used?
That's been an interesting question that we've had some internal debates on. And there was, I think it was a CPA firm that told one of my colleagues that if you don't use all the funds, there is no forgiveness portion. In other words, the whole amount becomes repayable. That doesn't seem to make sense to me. If you use $75,000 of a $100,000 loan, technically you could make the decision and you followed all the rules so that the 75 you spent was forgiven. The 25 remainder you could either keep in the bank as a low interest working capital loan or return it to the government at that point in time, and you're done.
Okay. I'm going to put this one up. This person, another comment, Kim meant to say employee, not employer, just as you're reading that.
No, contract labor costs, because if by definition, contract labor means you're renting people who are otherwise employed by some other entity, a temporary agency or something else. And so that is not deductible for you.
Okay. Next question. With a small staff who are part-time, if one employee cannot work during the time period, can the other employee add hours to compensate and not suffer a reduction? I think I heard this answer earlier, but go ahead.
I would look at it that way. In other words, if you had two people who are each working 20 hours a week, so you have one FTE, and one person stayed home and the other person worked 40 hours, you're still going to have one FTE. So, and assuming the compensation that the person who did work the 40 hours reflected what the two people would get who are working 20 hours, you would have met the criteria.
Let's see. Checking for any more.
I've got another one, Stephen.
Go ahead.
please, someone texted me again, said, please ask, confirm the $100,000 salary max. If an employee's annual salary is more than $100,000, confirm that up to $100,000 of their salary is allowable in the calculations.
Yes. I mean, and that's if you divide 100,000 by 52 weeks times 8 weeks, that works out to the 15,387 or whatever the number was in my presentation. That's the cap.
Okay, very good.
Brooks, if somebody has they're trying to get to the 75% to meet the loan forgiveness threshold, and they're not quite there yet, are they allowed, or how does bonuses, or how do some additional wages that wouldn't typically be a part of their payroll, how could an employer use maybe some of that as on a temporary basis, and is that allowed to get to the 75%?
The way the regulation reads, gross cash compensation, including salary, wage, commissions, tip. In other words, you can demonstrate that you roll checks to employees for a certain amount, and your full-time equivalent headcount has remained the same. You should be good. And if you wanted to give employees a retention bonus or a hazard pay, or whatever you want to call it, again, looking back at the spirit and intent of the program, you're getting money into people's hands. And so again, I say, don't suspend common sense. Think it through. Are you doing what the program was designed to do? And that's get people off of unemployment and on the job.
How much time do we have? Do we want to wrap up 10:45? The questions continue to trickle in.
Yeah, I would say answer some questions here for folks.
Yeah.
If they have.
Good. We touched on this question, but here's it's a longer one. I'm putting it up on the screen for all of you.
There is a specific language for seasonal employees, and I can't remember what it is off the top of my head, but in the guidance, they talk about an alternative period last year that you can use as a reference period.
Okay. We received the loan early on and could only employ essential employees the first few weeks. This will hurt us on our FTE. Is there any consideration for this?
Well, remember what I said in my presentation, if you bring everybody's pay up to the reference period level and the FTEs up to the reference period level by June 30th, then you don't get your spending reduced, your loan reduced. And that's that's kind of tough, because if you were a business that, say, couldn't open until 2 weeks after you got your PPP, but you started off with a skeleton crew and gradually added people, if you look at the payroll dollars you're spending, you're probably going to be under what you would have forecasted could you be in business. But the way the program is written, it's all about the payroll dollars or the compensation rate of your employees, hour salaried, and the full-time equivalent headcount getting back to pre-pandemic levels by June 30, even though your 6-day period extends past that. That's one of the things that's confusing about this.
Those are all the questions from the chat. Any questions? Justin, anybody text you with some new questions?
Yeah, I got another one here. This kind of goes back to the retirement question. Somebody said the person retired on April 1st. He was not laid off. Does that still go against our full-time employee count? If so, can I offer his job back and have him refuse to take the safe harbor?
As I said before, personally, what I would do is reduce his FTE from the period before. I mean, it seems to me it's less palatable to try and game the system by offering him his job back and having him refuse than to just say, this guy retired on April 1st. So comparing what we're doing after April 1st to before, you know, let's be reasonable about it. Now, I guess the other aspect of that is, was this a position that was going to be replaced? Was it an essential position? Or is it somebody who retired and you have no plans to replace him at the moment? Use common sense.
Right.
I got another one here that just came in. Are you saying, I'll just read what he says. Is he saying one payroll in the covered period before June 30th where everyone is back at full payroll counts doesn't hurt forgiveness?
Well, keep in mind that the third element of that is the amount of dollars you've actually spent. So I think where that question is going is, okay, if I call everybody back the last week of June, everybody gets their normal pay and work their normal hours. So I've satisfied the compensation level and equivalent headcount tests. Keep in mind, you're only going to be forgiven for what you've been able to spend, and you haven't been able to spend it. Probably what's going to happen there is your payroll portion of this is going to be much smaller than your non-payroll costs that you've been paying, rent and interest and all of that. So while you satisfy the two of the requirements, you haven't been able to spend the dollars.
Gotcha. I got another one here. It said, my 8 weeks is up June 11th. I'm not sure I understand what June 30th deadline means.
I don't know. That's the first time I've been asked that particular question. I don't have an answer to that.
Okay.
Everybody seems to be assuming that the 56 days is going to be past June 30th or at June 30th.
There's a couple more. What if you have increased FTE after you receive PPP?
Well, that's going to be good. I mean, there again, you're trying to get back to a certain level. To the extent you exceed it is to your advantage.
Good. Next question is, a restaurant or bar, we are going to have a hard time getting employees back to their full-time hours until we can open regularly. It looks like a statement. There's not a question there, but Brooks, if you have a comment.
Well, obviously, to the extent you've been able to employ people and pay them for takeout and delivery is going to help. But even if restaurants are able to open next week or the week after, I think is the next decision date, with social distancing and other things, you're probably not going to be fully staffed up. So for restaurants or other businesses like beauty salons, barbershops, some of those that have effectively been shut down, it's going to be tough to get much of your PPP forgiven.
But you can still use your PPP to pay them to sit at home, right?
Yeah.
So it certainly we feel the pain of restaurants and bars and understand what the question is, but you could use this money if you're worried about getting it forgiven. You could use it to pay them to sit at home during these 8 weeks.
Yeah, and I remember one of my colleagues, John Schmidt, is a restaurant expert, and I remember he commented in one of his webinars about a restaurant client of his where the chef conducted online cooking lessons and you know, some other creative things to keep engaged with customers and to, keep busy and generate some payroll spending dollars kind of thing. So a lot of different ways you can be a little creative on this, but within the spirit and intent of the program.
Well, and to that, Tyler, I think, to the spirit of that too, Brooks, I think the goal here was to convince companies to bring people back on payroll, even if they didn't have work for them. But I think the challenge has been, particularly with the unemployment system, the largesse that was given for that created a disincentive for workers to want to be able to do that. So I think that's going to be very impactful for a lot of companies. They simply were not able to get people back into the system. And to your point, Brooks, you're absolutely right. If a company offers to bring you back and you don't take it, that is grounds for dismissal. But what I see with a lot of companies in my community is they don't want to play that kind of hardball with their workers. They don't want to make them. In fact, some of them are like, you stay on unemployment, because you're getting a good deal. So every company's different. Obviously.
I've heard that a lot in Genesee County too. This is a very collaborative relationship between employer and employee.
Right.
And they're talking, and the employee might be saying, look, I'm getting too good of a deal to come back. And then the employer's making the hard decision there to say, I didn't call them back.
Well,
one of the challenges we've seen
to what they would have gotten on unemployment. They could do that too.
I was just going to say, one of the challenges that we've seen with some of our employers is that they don't want to lose their workforce, including restaurant workers. And, we had a tight labor market when the pandemic started, and some people still think it's going to be tight once we come back. So companies are doing what they can to keep their workforce engaged and to ensure that they come back. So they don't want to be in a position of taking unemployment away from those employees, because in some cases they're getting them angry. So it's a dilemma. Companies will have to decide what they want to do.
Well, it's like a lot of people have said, we're building the airplane while we're flying it.
One thing I want to share here, another comment came in. And I see two things. Someone applied for SBA over 2 months ago, and they've only received an email saying, thanks for submitting. So that feels like there needs to be some follow-up with the financial institution. And then what kind of help is there for businesses who haven't filed taxes yet? So this is a new business, hasn't been around long. Brooks, what do they do?
I believe the way the regulation is, they had to have been in operation on February 15th. So if you were in operation on February 15th, you're eligible for this. And what you have in the way of documentation will determine what you can be eligible for.
Mm-hmm. And then if someone applied 2 months ago, it feels like some follow-up should take place.
Absolutely. They should be contacting their bank.
And just to be clear there, in that case, if you applied with the SBA, you probably applied for the EIDL loan, which is a separate program than what we're talking about today. The PPP loan was you could only apply through a financial institution like a bank.
Yes.
And I think the EIDL loan is a completely other animal, but it has been really overwhelmed in that system as well. So, and what I've also heard about the EIDL loan, the Economic Injury Disaster Loan, is that people got money in their bank account and didn't even know it. So,
because you're not told that they don't send you an email and say, we're funding you. I've had a handful of clients say it just showed up.
Yeah. So if you haven't heard from it, if you applied to the SBA on the SBA.gov website, you probably applied for the Economic Injury Disaster Loan, and double check your income and your bank account to see if a couple $1,000s or whatever was deposited in there, because that wouldn't be uncommon.
And this person applied also for PAU, and it says that it's making them refile brand new every time that they log in with no success. Any guidance there?
I think they're talking about the Pandemic Unemployment Act, PUA. There's a bi-weekly certification that you haven't been offered employment, and I think they've waived the requirement for job seeking at the moment.
Mhm. Okay. Yeah, you're right. This person just popped into the account. Okay, it's 10:55. We've answered all the questions. Let me just echo what our viewers saying. Thanks so much for the Q&A, Brooks. Anything from anyone before we adjourn?
The only thing I might add, and Brooks, you stress this, I think what's critical here is I actually don't think the federal government is trying to trip people up and make this stay as a loan. I think they want to give leeway to ensure it becomes a grant. So I know a lot of companies are extremely concerned that they're going to get caught. But I think as long as you're trying to play by the rules, I think they really want it to be a grant. I mean, is that fair, Brooks?
Yeah, I would completely agree. And the banks don't want to make a big deal out of it either, because they'd like to get back to their normal business. So I think the forgiveness portion of this hopefully will go relatively smoothly.
Yeah, Brooks. I had heard from some banks too that this second round of PPP, I mean, it slowed down. The rate of applications slowed down. So there's actually, and correct me if I'm wrong, but there might be some even left over, as opposed to the first round where it was the PPP was applied for and it was defunded pretty quickly. If we get to a point where we're actually going to have extra PPP, or if there is a go around, do you see any other type of entities being eligible? I know in the first round, 501c6s were not allowed, in this first round, where 501c3s were. Do you forecast or foreshadow that the C6s might get a chance to participate as well?
I don't know. I don't have any insight on that.
Yeah.
To my knowledge, there is still money under the PPP program, usually because they decreased the size of the banks and loan amounts that they would take. So they were able to put more loans out to more businesses in the second round. And I think also some of the confusion about the rules and regulations and everything else may have had some people hesitate to seek relief for the program.
Mm-hmm.
So if you haven't applied, apply. It's still there.
Tyler?
Thanks, Brooks. Thanks for doing this.
My pleasure.
Really appreciate it. And I know, like you've mentioned this, Stephen, but this is going to be recorded. You can share this. You can come back to the link on the various Facebook pages or on YouTube, Flint and Genesee's channel. And I hope it was helpful. And then if anyone has any questions about the PowerPoint and would like to see that, reach out to Justin, Dan, Quentin, and I, or Stephen. And once we get those from Brooks, we'll share them with you.
Dan?
Yeah, I don't really have anything to add except that if you are having problems with your bank and you're still trying to file for PPP, you're seeing delays. Hopefully those have gone away, but if you are, then I would change banks immediately, because there are a lot of other banks that have developed a good track record of processing them, and there's no reason to wait.
And if to add one last thing, if anybody out there needs some additional help, guidance, assistance, or anything else, go to sbdcmichigan.org. We have 11 regional offices covering all 83 counties, and we would be delighted to give you a hand with whatever your concerns are.
Lots of support all around. Thanks, everybody, for participating. This was great. Tyler touched on everything. This will be available to you later. Brooks and team, thank you so much. Everybody have a great weekend. Thanks.
Thank you.